Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back. This week's beer is brought to you by St. Bernardus, Belgium, Japan, and guess what? It's nuclear powered. It's different. To wit, talking about nuclear stocks. Under the Radar Report prides itself on being in front of the curve. Certainly we've done that with lithium. I cite the tenfold return on Pilbara Minerals we've had in the past few years. PLS is the code there. We're still on that train, by the way, but just as important, it's not the only train motoring ahead. Yep, at COP27 in Egypt, for the first time at these UN climate conferences, nuclear energy got a stall. Well done, my atomic friends. And non-nuclear companies have been flocking to it. As many as 50 or more, according to different reports, because they're all obsessed with, trying to cut emissions, save power bills. I'm not sure whether it's that order, but anyway, the International Energy Commission has upgraded its forecasts, and nuclear energy is now predicted to double, the use of it double in the next 20 years. That's a big deal. And yes, the big driver is baseload power. What happens when the sun doesn't shine, when the wind doesn't blow, and you're trying to get those emissions down? Go nuclear. And the game changer on the nuclear front, according to some experts that I've been talking to, including our own Peter Chilton, is small modular reactors. So expect to hear more about that and the developments occurring there. But small modular reactors, big nuclear plants run by Homer Simpson, what do they all need? Uranium. And like lithium, supply is the big issue here. And also like lithium, ASX listed companies are among those in the box seat in providing the answer to that supply question. We've been covering sector flag bearer Paladin for a couple of years now, and it's tripled since we first tipped it, and we're covering it again this week, so I urge you to read this week's issue. But more to the point, in this week's issue we also list a number of other uranium stocks. We cover 5 of them that are close on the heels of Paladin. So these companies have more potential, arguably, but they've got different risk factors. So it's worth doing your own research, but just so you know, we've done a lot of research in the sector. And I guess some of that research involves technology, because like lithium, technology is moving very quickly. One of the stocks is at the forefront of commercial enrichment technology and is worth checking out. But the key with all these commodities-based companies, every commodity-based company, is the price of the commodity. So the key here is the uranium price. So it's traded below $30 US a pound for a long time. Then suddenly it spiked this year, and now it's been hovering around $50 a pound for the past few months. So if and when it gets above $65, they say that's the key catalyst for to galvanize production commitments. So that we're keeping an eye on the uranium price, and I tell you what, things are going to happen well before it gets to $65. Let me tell you. And so what we're doing is looking, of course, at the quality end of the spectrum, because there's obvious risks with this energy source. So I urge you to read this week's report on nuclear energy. Staying on the energy theme, a lot has been made of the lithium shortage, but not much about the shortage in battery-grade nickel. So lithium gets a lot of attention. Why is that? The substance that produces in the periodic table produces more bang for your buck. In terms of value, lithium is it. But the metal that's actually used most in batteries by mass is nickel. And the nickel the nickel price spiked from $10 a pound to $20 a pound in March. So it quickly spiked. But with all the nervousness, about the war and in Ukraine and the Chinese lockdown situation, it's come back. It's come back to its recent sort of levels of $10 a pound. But think about this: EVs are scaling up. That's a fact. And nickel production needs to double over the next decade to keep up with the demand coming from that. So that means producers will be sitting pretty. One of them, wow, what a segue. One of them is Panoramic Resources. Disclosure: we own Panoramic. That's got a long mine life project in WA called Savannah North. Now, this is a well-run company. Don't take my word for it. Take our publication's word for it and read this week's report. There's a lot going on there. What's next? What's coming up? More beer. Well, we've got a lot more new small caps coming your way, so that's exciting. We've also got blue chip analysis out today on the big banks and the big retailers and their relative valuations. And we've also got a macroeconomic comment. The beer. This one's called, it's got everything but the kitchen sink on it. It's called St. Bernardus Watteau. I don't know whether Watteau Tokyo Belgian Wit Ale. Anyway, to wit. What is wit? Well, I looked it up. A wit must be brewed at least 25% wheat malts in order to be considered a wit. So it's not just any wheat beer, whatever that means. So strictly speaking, it's a wit. And as a result of the widespread use of coriander seeds and other spices in Belgian wheat beers, they tend to be fruitier in flavour with a subtle lemony tang. Well, I definitely think it's worth a try. I'm enjoying it. I might have another. Back at you next week.